Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today, weekend edition. Today is Saturday, August 30th, 2014. So it's the end of the month. So we had August just ended, and September is about to begin. This is Labor Day weekend in the United States, so there is no trading on Monday. So this is a three-day holiday for everyone, if not longer. I'm sure many people are taking vacations. All right, let's take a look at the Dow. Here, by the way, here in the Dallas area, school started last Monday. So there's been one full week of school so far. So at least at the elementary and high school level and all that good stuff. Of course, the colleges are back to school. All right, so the Dow was up 18.87 points on Friday. Last 3 days, not a whole lot, just trending backwards. As you can see in here, small trading, a little doji bar here at the top. And then we've pulled back. It looks nothing more like a little pause. I mean, we'll have to see. So far, we got the 10 up above 21, 21 starting to curve up. And we'll see if this thing continues to push to the high side. And I don't think we're getting anything negative on a daily basis. Let me go ahead and bop to the weekly, and then we'll come back to the monthly later. On the weekly, we're getting a little bit of divergence. Of course, that divergence has been in here. You can see it on the RSI. You can see it on DI plus. Now, it's gone away a little bit here on DI plus in this last push. So it's we'll have to watch that. Now, these little down arrows I've got here, I've got it here where I'm saying that's June 17th. This is when the CBOE equity put to call ratios got extreme, okay? And so what I was doing is marking when that happened. And there's really, I think it was only 3 times, if I remember correctly, talking about it. And it didn't even happen to these extreme levels at the top in 2007. And I thought that the last time when I noted it, I thought it was kind of interesting that we were getting it. Actually, it was more than 3 times. I'm counting this as 1. We got it right here at the end of A, okay? And then we got it in the last swing as we're in the last half of this C, okay? Of the ABC, and now we're getting it as we're in what I think is C, the 5th wave of C up here also. So let's take a look at the S&P 500. It was up, 6.63 points on Friday, on 29th. So nice little up move, a little different than the Dow look. Continuing to push. It's hard to say that that's divergence. It's just too soon. When you look at the weekly, now that's a little clearer that we've got some divergence going on. We'll see whether or not it continues to push higher and divergence goes away. But right now, it's showing up as divergence. Making sure that I'm not missing some notes of some kind. Nasdaq's continuing to push higher here. I think definitely looks like it's trying to at least hit this secondary target. I've got a 46.65, and let's see. Again, nothing negative showing up on the indicator. So the markets are continuing their push. Nasdaq weekly again. We're pushing higher here. It looks like let's take a look. Yeah, I mean, see how this has gone higher. That's confirming the move on DI plus. The RSI has not confirmed it yet. Not yet anyway. Tighten that up a little bit. We'll see whether or not it does as we get into this. Now, the one thing I did note, I drew this line in here. Look at how the volume's dropped off on the last 4 days or so, three to 4 days. So this little rise that we've gotten, and this is the weekly chart. So this little rise in here has not been supported by substantial volume. That's not a good sign when you see this happening. So we'll have to, it'll be interesting to see if that means the market starts to collapse and pull back down here. New York Composite. Again, I've got this number up here as a target based on the ending of the 5th wave of this 5th minute wave, I believe is what we're calling it. These are minor waves. These are minute waves. Next level down. And then let's see where's the weekly? The New York Composite Weekly. Well, again, no divergence here. So a little bit of a mixed story on the weekly, on the weekly indices. Boy, talk about a trend that just, okay, nonstop. We just keep going. I guess this is what will happen when the Fed has got the money machine just cranking out. Okay, New York Composite, that's it. All right, now I'm going to step back and I want to take a look at the Dow on a monthly basis, because we just had, and I don't have all of the indices on a monthly basis for whatever reason. I don't know why I'm not getting the S&P 500. Here's the IND monthly. Okay, so here's the Dow. So this is kind of interesting. It almost looks like a little broadening action in here. And I don't think I saw that on the weekly. Although I guess you could almost make that case a little bit, but I'm not seeing that point down in here that I typically like to see. It's not as clear in here, but when you look at it on a monthly basis, it's just, the broadening out of lower lows and higher highs, although we didn't go to a higher high here yet on the monthly. We didn't take out the July high on the Dow, at least it's kind of interesting because I thought we did 153.80. Maybe we did barely. We did fractionally. I remember reading that. Okay, so now we're bouncing up the top here on this trend line. Okay, we've still got this broadening formation that's in place that I believe is negative. And let's see if we're getting, you look at the RSI, and again, it's, so, here's the way the RSI is looking in terms of the indicators. And, the tops are not at higher tops in here, and you can see the divergences that are showing up at every one of these tops, and yet, the market has pushed to the higher here and here, and when it did it here, it rolled over naturally. We remember that discussion. Let's see if I can get that a little bit better. All right, here we go. That's a little better. So you can see how we were getting divergence. We're getting divergence on the monthly here, and it hasn't come back up. So that, it's pretty negative. That's even more negative than some of the divergence we're seeing on the weekly. So again, now it was early here back in the late 90s that it's like, okay, divergence, so what? We're still pushing. And then you get to an extreme and then it sells off. So you just got to, the whole point here is to say, check. I know there's negative divergence in the backside, so we just got to be watching, okay? And as soon as you start to see some kind of breakdown, don't ignore it. That's the message. We can't sit back and go, oh, well, it'll be fine. It'll be okay. Because if it starts to break down, we're in a negative divergence environment in the market right now. Okay. The next one I want to look at is the Nasdaq on a monthly basis, because that's the only other one I had. Now, take a look at this. This is on an arithmetic chart, so it's showing the exact, not everything is equal here in terms of the way the chart is labeled and laid out. You can see the extreme blow off that we had in the late 90s in the Nasdaq. And the thing that's interesting right now is that this close right here is the second highest monthly close on the Nasdaq of all time. So as of Friday, the August close is the second highest, because this close here on March 31st was 45.72. We're at 45.80 right now. And the all-time highest monthly close was February 29, 2000 at 46.69. Intra-month, it went, of course, all the way up to 5132.52. So we are at the second highest monthly close of all time. And it's a heck of a comeback. I mean, so I made a note that said 14 years. Okay, so 14 years to get back. We haven't taken out the peak yet, but we're getting close. And it's really interesting when I think about extreme like blow-offs. Okay, when you think about the Dow Industrials, when the 1929 crash occurred, let me get rid of this, 1929 crash, it took 24 years for us to surpass, for the market to surpass the peak of 1929. It didn't happen until 1954. I think it was really towards right at the very end of 1954. So 25 years, I think it was. And when you look at the Japanese Nikkei index on a monthly basis, you talk about extreme. Here was the extreme. This is right in here. This is in the late 80s. This is when the Japanese were buying all the real estate in the United States, and they were buying the, I don't know, I think they bought the NBC building, or whatever you want to call it, the Rockefeller Center, and all that kind of stuff was going on. And then we collapsed. Well, look, they're not even close. It's been 24 and a half years, and they're not even close. They're less than half from the peak of the Nikkei in 1989 when it peaked. The highest monthly close was on December 29th, 1989. Okay, and if you notice, on a monthly basis, every high is lower than the previous high. They are still, their market is still in a downtrend. This low is lower than this. This high is lower than this one. Now it may be getting ready to bottom in here and turn, but I just wanted to, as a dramatic point, to see how long sometimes it takes markets to recover from blow-off type environments like this. Okay, so enough. That's it for a little history. Let's go to the short-term trading index and take a look at that. There we go. And I believe it's neutral. It's bounced up a little bit, and it's right here. The 10-day is at right at 1, so it's not doing anything. It's right at the neutral line. The VIX, CBOE Market Volatility Index, pulled down a little bit. No real signal in here that I can see. No real divergence. Nothing. It may be trying to turn in here. It's interesting. I mentioned this last time, how DI plus is above DI minus. And the high-low index in here. Where is it? There. It's right on it. Knew where I wanted to go. Okay, the high-low index has bounced up, and we're getting some chop in here. So I thought maybe we were going to start pulling down, but it just hasn't happened. The moving averages on a short-term basis are rising, so maybe this is going to continue to push. And the last thing, okay, I wanted to mention here, the 10-day, I don't have it on the screen, the 10-day moving average on the Chicago, the CBOE equity put to call. So this is on the stocks. The equity put to call, the 10-day is 0.57, so we're not down in the extreme territory yet. We have to get below 0.54 before I call it starting to get extreme readings. And so we'll keep watching that for sentiment indicator for extreme. So now let's take one last look at some ETFs in here, and then we'll be done for the day. We'll take a look at the semiconductor ETF on a daily basis. Now, nice little pop on Friday, pushing up again. Now they've said, okay, yeah, we can go to new highs too. So we're continuing to go and push and lead the market. So no negative with that. And on a weekly basis, SMH on a weekly basis, some divergence is coming in. Okay, so this move higher, we are getting some divergence on the SMH. So even though it's saying, yeah, I can try to lead and push, it's doing it in a weakened condition. Okay, now let's look at the home builders on a daily basis. Market vectors, home builders. Home builders is trending down. This looks weekly to me. Oh, I did grab the weekly. Thought maybe I had it set wrong. And there we go, Spider Home Builders ETF. There we go. That's what I'm looking for. Okay, so this has bounced back up. Had this gap here in here. That's kind of interesting. So we may have done an A, B, C correction, and the B move had the rising wedge, and we came back down. So this could be some kind of A, B, C correction, and we're getting ready to go, and we're moving here. Now we break this trend line, and it's going to be a sign. And well, I tell you what, this breaks this trend line, and all the other ETFs keep rising. We're going to have to say, okay, this market's going, and it's continuing to go. But we'll have to see. Right now, this is downtrending, and the downtrend is a little more evident on the weekly. Here we go, that I just had up here. So you can see how it's, went to lower low, lower high, lower low, and now we got this. So again, if this turns and rolls over, then we're going to know that this is starting to break down, and it's possible that that's what's happening. Not getting any extreme readings in here that I can tell. Nothing that's really jumping out at me. Okay, the XLF is the next one we'll take a look at, and financial. It's pushing up. I mean, look how it's pushed to new highs, and that's kind of the Goldman Sachs and JP Morgans and everything are doing really well. They're just continuing to push in here. Let's see what the indicators are saying. The indicators are saying, fine, let's go, let's push. So not seeing anything negative on the financials. And the weekly XLF weekly picture. See if we get in divergence here. Now the volume dropped off again. I had made note of that, and that was the other thing, we kept seeing the volume drop off in this big move. So yeah, we're getting this move. It kind of reminds me of a tree branch that's really getting extended, and the longer it gets extended, it seems to me like it weakens. It's like you put any weight on the branch and then all of a sudden it just cracks. That's the image I'm getting, and I really wonder about some of that. And here you can see on the RSI. So on a weekly basis, this looks not very good. And this is not being confirmed in here in terms of the move with this weekly move up here. Let me shrink this down to get a little bit better on the price action. But that's pretty dramatic on the RSI. Now here it's breaking out a little bit on DI+, so I'm not sure about that. On the demand index, it's confirming the negative picture on the RSI. Now if it breaks this trend line, it could be different. It's right at the trend line on the RSI here. So if it breaks it and pops to the upside, then it could be signaling. Well, actually, that was the demand, I believe. Did I? Here's the RSI. This is right. This is right. So it's right there. So we'll see. We'll see if it breaks out of this rising channel. This parallel lines, this rising channel in here. This is, in a weakened condition, but it may somehow break out. But we'll just have to watch and see how it does. And the last one we're looking at is the high yield fund, because I'm starting to pay attention to that. If I can, here we go. There's the daily. And so I remember this was the dramatic pullback that we had in here, and now we're getting some chop sideways. So the real question is this topping and getting ready to pull back down, or is this just a consolidation for another pop to the upside? And don't have the answer to that. I had to guess based on this little fish hook that Monday might be a down day, but we're just talking about one day, so that's not what I'm looking for. Look at the volume dropping off, and so when you look at that, I was like, there's the volume. So even though this had a nice dramatic rise, it had the volume dropping off pretty dramatically. Okay, and one last thing we're going to look at is that on a weekly basis. So there it is, HYG weekly. And that was the other thing I noticed. Okay, so the market has gone to, let's pull back the S&P weekly, and let's pull it up on price. So here's what the market's doing, and here's what the high yield fund is doing. So the high yield has not confirmed the move in the market. Okay, so that's a signal that we're getting in here. And then with the sharp break, that's why we have to closely watch this to see if it starts to roll over and roll back down. Okay, that's it for the market snapshot today. We've gone almost 20 minutes. It took a little bit longer than I thought, but we do this with the monthly charts on the end and that type of thing. And that's why I like to look at the weekly too. Probably won't look at weekly charts every week because you get one more bar. Usually one more bar doesn't make a difference. So I think I'm going to start unless I see something really dramatic, I'm going to start looking only at month end on the weekly charts. And then I'll look at the weekly charts. Then we'll look at the monthly because you could have some kind of compression bar or something in there. But that's what we'll do on an ongoing basis from now on. Okay. I will be back. Let's talk about the schedule here. I will be back. Monday is Labor Day. Instead of trade ideas tomorrow, I'll have trade ideas out on Monday the 1st. There will be, of course, no market update or anything. It'll just be trade ideas on Monday. And then we'll be back with our regularly scheduled one on Wednesday. And then I'll have another update video on 3 or 4 stocks on Tuesday that I'll put out. And again, I'll tweet it when I do post that and everything. So follow me on Twitter at Joe Henches. So it's real easy to follow. Here's the spelling right there. So if you enjoyed this video, thought it was beneficial, please share it on social media. And if you're not a subscriber, subscribe. You'll be able to download a PDF I've got for you and then access to the Trade Ideas page. And by the way, I will be taking all the trade ideas. I don't have any open trade ideas right now. We closed out of them this last week. And I'll be taking those and putting them over into an August summary document underneath the tab Past Trade Ideas. That's where we've got the results. And so this is, I believe, the 6th straight month on the trade ideas where the month ended up profitable, so I'm very happy about that. I'd like to get the winning percentage back a little bit higher, but it's still doing very well. So the summaries are all going to be there. I don't have it yet. I'll be working on it sometime this weekend. So that will be out there for you too to take a look at. So anyway, this has been Joe for Beyond the Chart. Have a great 3-day weekend, everyone here in the United States and everyone everywhere else. Have a great weekend also.